All right, good evening, traders. Today is November 21st, 2023. My name is John Carrigan. I moderate the BYOB Trading Room. Tonight's free webinar in the free room, entries, exits, and stops. All right, so let's get started. First, let me find my PowerPoint here. And there we go. All right, so first I want to say thank you for being here. I appreciate you all being here. This is being recorded. It'll be on my YouTube channel. If you want to copy it down, it's right there. The PowerPoint is also available. If you just email me, there's my email address at the bottom there. And before we get started, let's start off with the disclaimer. Trading involves significant financial risk. It's not suitable for everyone, and no communication from us should be considered as financial or trading advice. All information provided by Hit and Run Candlesticks Incorporated and BYOB and its affiliates and representatives is intended for educational purposes only. We're teaching you how we trade. You are advised to test every new approach prior to implementing it. Past performance does not guarantee future results. All right, so you got to do your own due diligence. All right, so entries. Entries, I'm going to say I like to study the price action because the moving averages and the price action give me clues on where to enter. All right, so first, my success and your success as a new trader is going to be 110% dependent on our ability to follow rules. Without those rules, we're going to have chaotic trading. It's going to be inconsistent trading, and we have to have the discipline to follow those rules. All right? Without any rules, you're going to find that trading is very, very difficult. All right, so proven tips from successful traders, myself included. All right, so the next one is trade in the direction of the market. If the market is bullish this week, today, you want to pick stocks that are also bullish and happen to be bullish today and are bullish this week or in a trend that's bullish. Good evening, Greg. All right. So in other words, trade in the direction of the current trend of the product considered. So if the QQQ is bullish and you're trading products in the QQQ that are also bullish, those would be acceptable. You don't want to be trading bearish products in a bullish market or in a bullish indice. It's just, now, do we pick tops and bottoms? No. The answer is no. All right? The reason we don't pick tops and bottoms is because we're not very good at it. All right? So we don't have an edge when we pick tops and bottoms. Okay? Well, our edge comes from trading the trend. And it goes back many traders ago. The trend is your friend. And it couldn't be more true. All right? So picking tops and bottoms, if you're into it, you're going to find it very difficult. Do we short daily uptrends? No. These are disciplines that I'm talking about, all right? If you want to have success, shorting a daily uptrend is not advisable. I mean, you can do it, but let me just say, after 5 or 10 trends like that, you know, you're gonna find yourself on a whole lot of unnecessary struggles. Do we buy daily downtrends? No, we don't. Okay, because stock's moving down. The trend is down. The trend is my friend. So I don't want to buy stocks that are continually moving down. And because I don't pick tops and bottoms, it would not be advisable for me to pick stocks that are trending down to buy. All right, so we use our 17 EMA. It's kind of an indicator. We call it a trendicator or a trendinator. Either one will work. All right, it's really just an indicator. And when the price goes above it, it changes the color to green. All right, and then when price goes below it, it changes the color to red. So it's kind of an indicator to tell us which way the current trend is heading. All right, now I have a rule. You can use this rule if you like this rule, but if you don't, I don't mind either way. I like to buy products that have retraced 51% of their last move down. In other words, if a product is in a downtrend and we break 51% of that downtrend or that uptrend, it makes a move, pull back down. Excuse me. Let me start over, right? Let's say it's in an uptrend because we're going to buy it, right? And then it makes a pullback. Well, once 51% of that pullback has been recovered, that's when I like to buy it. All right, and I like to sell products that have retraced 51% of their last move up. In other words, once they've retraced back down 51%, that's when I like to short them again. And it's not going to make sense till I show you. But here's a chart, all right? This is a chart of Apple, all right? Now you can see that I left the trendicator on there, but I took price off, all right? This is a 2-hour chart. Now you can see the yellow line, that's my 3 EMA, and the white line, that's my 8 EMA. Now the colored dots, that's the 17 EMA. And it only changes color. When price is above it, it changes the color to green. And when price is below it, it changes the color to red. So you can see here is the last move down for Apple, all right? But then it moves up, okay? Now it's trading up over 51%, all right? This is the quadrant lines. This would be the midpoint, this dash line right through here, all right? But it's still underneath its downtrend. So I really don't want to buy it. But once it gets up over the midpoint, breaks through its downtrend, and then sets up around here in the upper third, you can see that that would be a wonderful entry as price rockets off to new highs. All right, so now I'm going to take the next slide. And now you can see, here's price. This box right here represents the upper third. We're on top of the downtrend, and this is the 4-hour chart, okay? Now, for those of you that like to swing trade, let me just offer a solution or maybe just a small suggestion. If you entered on the 2-hour chart and you exited on the 4-hour chart, look how much profit you would have gained. Okay, so here's a enter on the 2-hour chart and then exit on the 4-hour chart. Now, you don't have to exit until the 3 crosses over the 8. See here, the 2-hour chart. Let me just go to a chart and show you because this is not really working. All right, so here's a 2-hour chart. All right. And you can see when the 3 crosses over the 8, you can enter there. If you want to be early, me, I like to wait till it's 51% and over the downtrend line because I don't want to be caught underneath. You can see this one retraced 51% and the downtrend line smacked it down one more time. So you can see right here, here's the 2-hour chart. You've got the 3 crossing over the 8, all right? And it stays over this 8 right there. And you're over the downtrend line. There's an entry. You can see right here this would be the upper third right here. So price now is in the upper third. And then if you entered there, but you managed on the 4-hour chart, notice you don't even have to set a stop until that 3 crosses back over the 8. All right, now who wouldn't like one of those trades, right? So where do I measure the top and the bottom? Carry. You start from the top of the last wave to the bottom of the wave. All right? All right, so let's just imagine that this is a wave right here. Okay, so here's a wave cresting. I don't know if you ever surfed before, but here's a wave cresting. So we would measure from the top of this wave to the bottom of this wave. So let me turn on the candles. All right, so you can see the candles when I move the measurements in. Okay, so now I'm going to take this. Now I'm going to use my handy tool. It's called a quadrant line. So you can see here's the top of the wave to the bottom of the wave. All right, so all the way up there. Now you can see if I'd have bought this when it reached over 51% there, I'd have got smacked down right away by this downtrend line. You see that? All right, so that's why I'm saying, like, it's going to be important that you have a set of rules. Otherwise, you'll experience this type of pain right there. See the pain? You buy, and the next thing you know, it's $20 less. That's pain. And that comes from no rules. When you don't have rules, that's the type of pain you experience. You're buying at 188, and then in 3 days, it's down here at 172. Okay? That's what I'm trying to save you from. Unnecessary pain. All right? That's the whole purpose of this. To save you from yourselves and the unnecessary pain. So here's the next wave. From the top, carry, to the bottom. All right? This is where we measure. Top to the bottom. Recovers 51% right here. Okay? But notice you're still underneath this downtrend line. You got to wait for it to get over that downtrend line. And now you have the 3 over the 8 in the upper third. In my rules, I have permission to buy this. And if you can see on the 4-hour chart, this thing rockets off to nice new highs right there. Okay? Just riding the 3 and the 8 all the way up. How do I define my quadrants? They start off 1, 2, 3, and 4. 1 being on the bottom. Okay, quadrant 1. Here's the upper quadrant, the lower quadrant, the mid quadrant bullish, the mid quadrant bearish. Yeah, it's part of TC 2000. Hey, CJ. All right, so this quadrant line divides this move into 4 equal parts. The lower part, the upper part, the bearish mid part, and the bullish mid part. And this dashed line right here, that represents the midpoint. That's going to be your 50-yard line, your mid-court, mid-field, depending upon what sport you favor, you know where the halfway point is, okay? The 50-yard line. All right? So that's midpoint. And now I just eyeball the upper third. I don't go in there and calculate it. Now, if you want to get the Fibonacci tool, you can pull that out and calculate the upper third. Me, I just eyeball it because stocks move in and out of that area quite often. I'm just going to kind of eyeball it. Hey, it's closing in the upper third. That's good to go. All right? So here's a 2-hour chart. If you entered on the 2, waited for it to get over the midpoint, up over the downtrend line, and now you're in right there. All right? And then you slip to a 4, and you don't have to do anything. You don't even have to set a stop until the 3 crosses over the 8. Now me, I like to take profit into gaps up. I like to take profit into big rallies, big candles. Until then, you don't have anything. You just kind of hang with it all the way up until the 3 crosses over the 8. Right there. You don't even have to set a stop. Price just takes care of everything. There's no emotion left to it. All right? Now you got a big candle at the end here. Here's a move up. Big candle at the end. You can take profit there and reload at the 3. You got a gap up. You can reload. You can unload there and reload back at the 3. These are just different ideas for you so that you can capture profits and reload and stay back in the game. So there's Apple. All right. Enter on the 2. Manage and exit on the 4. You don't even need a stop. You see that? No stop necessary. You let your emotions be free and let the technical indicators tell you when to get out. So you enter on a 2, manage and exit on a 4. Right there. Now, who couldn't make money on that? If you couldn't make money, go ahead and just speak up now so I can help you. All right, let's try another chart. All right, let's try NVIDIA. All right, so here's NVIDIA. All right, so let's not fool ourselves here. There's a downtrend happening, right? All right, let's not be foolish about it. We just can't take any old 2-hour uptrend, right? We got a downtrend there. So let's draw a line right across. All right, so we don't want to be bullish until price breaks the downtrend line, right? So let's take the price and remove it off. All right. Now let's measure the last wave with our quad lines. Okay. Now you could have entered here on the 2-hour chart if you wanted to. But bear in mind, you're still in the lower third and you haven't crossed the midpoint. But now you're over the midpoint. You're over the downtrend line. That's your last wave. Price is now recovering over 51%. So if you got 51% of anything, then now I would have to believe that the bulls are in charge if they're holding the price action up over here. And you got an opportunity to enter right in through here, or you can wait for it to get into the upper third if you choose to do so. So that would be up here. You could enter right through here and then ride it all the way up, take it out, change it to a 4-hour chart. And you can see right there, the 3 never crosses over the 8. You'd be in it all the way. Actually, you'd still be in it. I don't know if it's gapping down today. It looks like it's over. If that says 491, it looks like the 3 is going to cross right there. But there's an opportunity. So there's an entry. And there's an exit. And there's no stop needed. All right. Now, what happens if it goes up on the 2, all right, and then it rolls back over? Well, once the 3 crosses over on the 8, you're out, right? Oh, earnings after hours? I gotcha. That'll drag us down tomorrow. All right, so if you enter on the 2 and then the 2 rolls over, in other words, the 3 crosses underneath the 8, you're out. You understand what I'm saying? The technical indicator takes you out. You don't even need a stop. All you need is the discipline to shut the trade down. That's it. You need the discipline to shut the trade down. Now, if you want to put a stop in, we can go through that and we can look for places where you would likely put a stop in. All right, so you're up over the midpoint and you're up here. Well, I would put my stop in right underneath that red candle. In a bull trend, I find a red candle with a low and I put my stop like 50 cents below it. When I put my stops in, let me just say this, okay? If the price of the stop should be like right around 430, then I place my stop at like 429.50, okay? You understand what I'm saying? I give it room. I give it space to breathe. All right? And say my stop is supposed to be at $7, all right? Because that would be the low. Well, then I put my stop down at like $6.79. I give it like 20 cents or something like that. Because I want to give it room to breathe. Because chances are it's going to come down. It's going to spike the $7 mark. And it's gonna put a nice tail into the bottom. And the last thing I want to do is be part of that. Okay? Will I get out on a 3/8 cross on the 4-hour? Bow. I would manage it on the 4 until the 3 crosses the 8. Okay? When the 3 crosses the 8, trade's over. All right? The 3 is above the 8. On the 2-hour chart, I can get in. On the 4-hour chart, when the 3 crosses back over the 8, I'm out. All right? Can you make money doing that with NVIDIA? Let's take a look at another chart. Here's Intel. Let's go with the 2-hour. All right, so here's the 2-hour. You can see the trend change right there. Okay, you can see the last wave down right here. So we recover 51% of this last wave down. So I would include just this part right here. All right, so we're up over 51%. We're back into the uptrend right there. You can get in on that. And then I go to the 4-hour and I manage it. All right, now if you notice, watch this right here. See, doesn't that look close? Now I go over there. And you can see my 3 period says 38.04. And what does my 8 say? 38.03. So technically I'm still in this trade, aren't I? You guys understand that? I'm doing the 3/8 cross, okay? They never cross. You understand that? The 3 period, the low of the 3 period is 38.04. The low of the 8 exponential moving average is 38.03. you're still in this trade. Oh, but wait, what about this one? The 3 is at 38.36. The 8 is at 38.31. You're still in the trade. No action needed to be taken. And now you start to get climactic with big candles at the end. There's your clue. The end is near. See the big candles at the end? This is coming into exhaustion right there. See the separation from the trend indicator and the price action. All right, so there's Intel. There's another one. Let's go look at AMD. All right, here's your last wave down. There's your midpoint right there. Okay. Here's the midpoint. You can enter it at 51% there. All right. Or you can wait for the upper third, which would be right here. Okay. And then you're in on the 2. So here's a 2 hour. You're in on that candle. You're closing over the midpoint. This candle rips over the top. You can get in on this one, or you can get in on this one in the upper third. And then you get to ride that all the way up. Take your 4 hour chart. And you can see, you can ride it all the way up there, and now you can see the 3 is crossing over. So now you're out at 119. So you're in at 108, let's say 110, maybe 108, 104, and you ride it up to 119. That's a pretty nice ride right there. So you enter on the 2 hour and you manage on the 4 hour until the 3 crosses the 8. I use a 10-minute chart when I day trade, SAS. I day trade every day, and I use the 3/8 cross on a 10-minute chart. And what I like to look for is see this consolidation right through here? Right there. That's everything I hope to find. Right here. See how price gets tighter and tighter and tighter and tighter right in there. And right in here. Everything's getting wound up. All right? It's just like ping-ponging back and forth real fast. And then all of a sudden you get this, the energy is released. And when that gets released right there, that's what I like to trade. Is that it's like Michael Jordan just jumping from the, from the foul line and, just jumping up in the air so he can score a basket. What do you mean, why not trade real money? I do trade real money. So the idea is to enter the trade after the 51% on the 2 hour, manage it on the 4 hour. Yes, Joan, that is absolutely correct. Thomas, do you have a question? Carrie, 2 hour, 4 hour thing is for swing trade? Absolutely. It's going to be hard to do intraday day trading on a 2 and a 4 hour. Yes, I use 10-minute charts. So I would take this chart like this. And I'm just going to zoom in there. Well, I can't get it to blow up right now for some reason. All right, so now I'm going to take this area and I'm going to go to a 10. So here's price consolidating right through here on the 10. And you can see here's the shoot. There's the Michael Jordan leap. And it comes back right here. And then it leaps up again right there on a 10-minute chart. See the shootout right there? Right over the top of these. Then you got a pullback right here. And you stay and you bounces right at the 50% line. Yeah, that's exactly right, Ed. Yes, SAS, I use day trading. I use quadrant lines all the time on day trading. Yes, I always want to know when the midpoint and when everything is working, or when the midpoint is breached. Oh, absolutely, Larry. You can always set a alert when the 3 crosses underneath the 8. In order to do that, you would just take this. And you would, and it says somewhere on here, set an alert. Create price alert right there. Create price alert when price is underneath a certain number right there. See that? Create price alert. I don't trade too much after hours and pre-market hours, Chris, but you can do that. Back to swing trading. I like to trade the 3 and the 8. When price comes back to the 3, I like to reload. When price comes back to the 8, I like to reload. Vern. On the 4 hour. Oh, thank you, Larry, for being here. I want to wish everybody a happy Thanksgiving, all of you that made it here tonight. I don't know if some of you are leaving early, but if you're here, I want to wish you a happy Thanksgiving. Yeah, or per indicator, or you can just set it when the 3 cross, when price crosses over the 8. How long would I stick with a trade if it's just going sideways after crossing the 51? Walter, those are the best trades. All right? Let me show you why those are the best trades. Here's AMC before this nice rocket ride, like from 950 all the way up to 1150. All right, and I'm going to show you why. I'm going to get the quadrant lines. Now you notice how price is held in the upper 51%, like the bulls held control of this the whole time. All right? See how it's going sideways? I love that. It's just winding up. It's waiting for price action to be released. And then you get that release right there. Boom. You get that Michael Jordan leap right off the foul line or the free throw line. I just hawkishly watch it. I'm waiting for that 3 to bounce up over the 8 right there. Those are the best ones, the ones that just consolidate. You know what I'm saying, Walter? Those are the ones you want to watch and just let them consolidate. Because those are the ones that are winding up for the next move, to spring forward. Carry for DG 2-hour chart. Do you count the last wave from August to, if so, DG hasn't traded above 50? Let's take a look at it, Carrie. All right. All right, let's look at the 2-hour first. All right. Okay, so if you look at DG is already in an uptrend, right? You already have an uptrend going. You don't have to wait for a retracement, but you got one anyways. And the nice thing about this is that it's gone up right here from this high to this low. I'm on the 2-hour time frame right there. You're breaking over the 51%. Not only are you doing that, but you've got on the 2-hour. All right. This is a nice trade. You're green on the 2-hour. The 3 is up over the 8 on the 2-hour. It's in a bullish uptrend. You've got so much going for this. All right. Here is the resistance right here. Let's just slap a line right across. Let's connect this one and this one and this one right there. Okay. So there's resistance right there. You can see because price action's telling you it goes up and it comes back. All right. It goes up and it comes back. It goes up and it comes back. It's telling you this is the resistance. It goes up and it comes back. But it fails to make a lower low on this one, Carrie. See that? That's a failure to make a lower low. Market law number 4, when price fails to make the lower low, it's going to go back and challenge the high. Okay, so it failed to make the lower low, so it makes the higher low. And now look at it. It may not get there in 2 moves like this, but if you give this time, this is on its way to go challenge this breakdown candle right there. So where's this heading? For the breakdown candle high right there. That's where this is going. You got a 2. It's in an uptrend. The 3 is over the 8. The whole product is in an uptrend. The market's in an uptrend. You've got so many green lights on this. If you're not in it, you're not following your rules. If you've seen it. Now, I've never seen it. But now that I see it, my rules would say you need to take this. You filled the gap. And you're trading up and over it. This has got everything going for it that you wanted, right? That's good to go. Yeah. And if we put the quad lines in, you can see the bulls own this. They closed it in the 51% line. All right, the bulls have possession of the ball. And they just scored a first down. They're about to score a touchdown. You notice how support held resistance became support. See how price went down and then it got like swooshed back up? See that tail? Well, that's buyers. Anytime you see a tail, that's buyers. Okay? You see tails? Those are buyers. You see a red candle followed by a green candle that takes price right back. You just squish that together. You got buyers there. This is doing all the right stuff. I like that. Nice chart, Carrie. George, thanks for being here. Thank you so much. So would I place a 127 call, AK at resistance? 127. Yeah, I probably would buy a 127 call. It's already over resistance. It's on support now. You can see price is held support. And it's going up over the midpoint. Yeah, I would place a 127 call. Preferably I like to be in the money a little bit. Okay, I like to have maybe like a 121. But open interest is more is something that I favor more than price. Sometimes I wind up getting a 90 delta, but because it's got more open interest. I like 500 or more in open interest. That's just my preference. And if I ruin my delta over it, I'm fine with it as long as I'm in the money. Oh, you're welcome, Carrie. Yeah, you're over resistance on this one, CJ. It's now shown you support, so I like this to go higher. Yeah, 127 wouldn't be bad at all. 117 would be better in my book, but I'd do a 127. Walter, NUGT. Walter, why don't you tell me what you see in NUGT? Because I'd like to do it with you. Tell me what you see. Uptrend, downtrend. You want to look at it on the 2 hour or the 4 hour? I like helping people, but you got to help yourself, all right? So work with me. Yeah, in the money is more safe. That's up 2 hours. All right, thank you. Okay, so we're on NUGT. It's a 2 hour chart. All right, let's just make sure we're not in a downtrend. All right, now we do have a trend right here. That was a downtrend. Okay, and then you know what? We seem to have resumed that downtrend right here. I'm just going to point out what I see. I'm not picking on anything. I'm just going to point out what I see. Okay, so now they broke this downtrend, and now they made a higher low, all right? And they've also broken this downtrend right here, and they made a higher low, and they made a higher high. And that's just on the 2 hour time frame. So this is good to go right here. Now based on this wave from there to there, just going to measure this last wave, and you look like you're really in good shape here. Here's the last high down to the last low. As you can see, you're in the upper third. This is looking really good. You have space between your 3. I'm just going to move this out of the way. You have space between your 3 and your 8. This is good to go. And then I'd flip to a 4. And I wouldn't get out till the 3 crosses over the 8. I like that. That's a beautiful thing. Now, when I get a downtrend, I just want you to beware, okay? How much how much rubber does the rubber band get? Okay, let me just explain this to you. Okay, for me, how much rubber does the rubber band get? Because sometimes you see how this spiked it up here, and then the rubber band slung it back down. Okay, now we spiked it here, and the rubber band slung it back down, but we made a higher low. So this really looks good. But typically, I give it 1 candle, 2 candles, 1 candle, and 1 candle over this. That's it. All right, 1 candle over the top of this high right there. And then that's it. That's the end of the rubber. If they produce another candle higher than that, then the rubber band is broken, and this is good to go higher. You ever get to a trend line and you notice it seems like it's got rubber in it, like it goes up. See how it stretches, but then it comes back down. Okay, so but this one looks clean and it looks good to go. This is really good. I like that on the 4 hour. That's a beautiful chart. Thanks for sharing that, Walter. I like that. Are you in it, Walter? Are you in it? Are you thinking about getting in it? You are in it. Awesome. And what made you get in it, if you don't mind me asking? Was it the daily chart? Or was it the fact that gold just keeps moving higher? It was the daily chart? That's a tough daily chart to buy into, the daily. And you got the higher low. Is that what made you get into it? The higher low right there? Probably the higher low, right? It went up, pulled back, makes a higher low, and then slings through. So, yeah, I like it. Joan asked a question. So the rule is you have to be in an uptrend on the 2 hour. Yes, I would definitely like that, and you can determine that on the higher time frames. Correct? Well, yeah. You want to look at your chart and make sure that your daily is in an uptrend. Now, if you look at Apple, Joan, all right, it was definitely in a downtrend, right? No question about it. It was underneath this trend line. But it started moving up, and it just finally took that 17 EMA and turned it green. And you notice it just finally got it green right there. But rather than experience the same pain that these people experienced right there, you know, I'm just telling you to have a rule, like maybe not buy under a diagonal resistance line. Because that downtrend line, if you look at it, it acts just like horizontal resistance, right? Price goes up and then comes back. Well, it does the same thing. It's just its diagonal resistance. Price goes up and is rejected. Price goes up and is rejected. So you might create a rule for your trading plan. I don't want to be underneath some diagonal resistance when I'm buying long. I want to be on the other side, right? You know what I'm saying? Yeah. I mean, that's one of my rules. I like to be on the other side. Now, will I trade it on this side? Yes. In a day trade, on a 10-minute, when I see a shooting candle like that, yes. All right, but I'm looking for, whenever I see a shooting candle like that, that's a big Marabuzu candle. That's what we call them. All right, and whenever you get one of those, if I don't see follow through, I'm out. Okay, 90% of the time you get a big Marabuzu candle like that, if you don't see follow through, then think about getting out. Okay, you can see no follow through, it came down. All right. See that? Boom. And then it came back down. And then it even went back up here. And look, and then it failed there. You see that? Okay, so I'll trade this on an intraday, but I want to see one of these candles and I want to see follow through. That's what I like to see. I teach the people in the room, this is what to look for at the beginning of the move. When you see this at the end of the move, that's when you're taking profits. See all these people that bought here? Oh, they're taking profits. See that? It didn't get up. And then when it finally did get up, sellers took it back down. Almost to the point of origin. There's the breakdown candle low. Here's the low of the move. All the way to the breakdown candle low. The breakup candle low. Right there. Notice that? No follow through. It tried to get back up. They tried to force it, and it came back down to the breakup candle low. No, I don't do the wave count, but I do the last move. Okay? You want to measure. I like to measure the last move. All right? So if I lose 51% of that last move, all right, then I don't want to be in it. I want to be up. I want to buy it when the bulls own control, and I want to sell it when the bears own control. Okay? I just have so much more success that way. Yeah, going up. Oh, Walter said it's going up over the 8. Okay, he's talking about that on the daily. I got it now, Joan. Okay. Carol, have I ever used Heiken Ashi? Hey, Carol, how you doing? I have used Heiken Ashi on the daily chart. I'm just not accustomed to it. I'm more of an intraday trader. So I don't really use Heiken Ashi on the daily chart because I kind of want to see that daily candle. I want to know if it's going up or down. I want to know if it's bearish engulfing. And sometimes the Heiken Ashi can hide that. That's why I don't use the Heiken Ashi, because I'm mostly an intraday trader. All right, you guys know Friday is just a half day. We close at 1. There won't be anybody in moderating the rooms. All right, so you guys know that. You guys know Thursday the markets are closed. So y'all have, if you're from America, I hope you enjoy your Thanksgiving. Yeah. Yeah. On Wednesday, Wednesday is a half day. I think it's a full day for the markets, but it's a half day for the moderators. Friday, there's no moderators in the room, but the rooms will be open. Does that clear it up, or did I confuse you? So tomorrow, the moderators are there till 1 or noon. Okay, but the market's open all day. On Friday, the market's open till 1, and there's no moderators in the room. Yes, the market will be open Friday, but there won't be any moderators in the room. All right, traders, here's your chance to ask me any question, all right? All right, I want to help anybody. If there was something that you needed help with, your weakest link, your weakest skill, is there something that I could help you with? Oh, thanks, CJ. Is there something I can help you with to help you be more successful? If there is, tell me what that skill is that would help you be more successful. It could be options. It could be covered calls. It could be spreads. It could be entries, exits, and stops. It could be anything. You name it. Name it. Because, I mean, we can do some of it right now. Yeah, you too, VJ. Are you buying too many shares? Yeah. Well, I mean, that was one of my slides, actually, was down here. You know, what if we entered long on the 3 crossing above the 8 on the 2-hour chart? Okay? And then my next slide was, what if we exited on the 3 crossing back under the 8 on the 4-hour chart? All right? And then what if we limited the number of positions to no more than what we have the ability to monitor? Okay? So, I mean, if we got to be able to watch those charts on the 4-hour to see when they cross over, that's when we kill the trade. That's it right there. Yeah, that can be a deal breaker sometimes, Joe. It's discipline, Joe, and it's hard. It's not easy, and it's even more difficult when the trade's upside down, isn't it? It's even more difficult because you want to save the trade. I know what it's like. Sometimes it's just better to kill the trade, or, you know, find a call or a put so that you're not going to get buried anymore. Emma says stops. We can do some stops right now, Emma. All right. So let's just take Apple for instance. Okay, Emma? And let's just look at it. Let's say you're swing trading Apple, and let's go to the 4-hour, and I got price action up there. So for me, let's just say you're in this trade and you're not using this 3 and the 8. Okay, so where is it? Where would I have my stop? Well, okay, see this gap up right there? See where that gapped up? Well, we all know gaps get filled, right? So that would be when after price gaps up and then it holds the gap. See how price came down and then you turned back up because it's a red candle. So at the end of that, I'm going to zoom in. See this little tiny tail right there? You know, 2 to 10 cents, 5 to 10 cents below that tiny tail. That's where I put my stop, because that showed me that's where the buyers are. All right. You see if you see a tail, Emma, that's telling you where buyers are. Okay. So if the buyers fail you, you really don't want to be in it anymore, right? Think about that for just a second. If the buyers fail you, you don't want to be in it, right? Because it's done. The buyers aren't buying. They're not doing their job. And that's what you need, is for them to do their job. So here we got, you can see a tail, and a tail. So I like to take my box and just kind of box this off right there. And then, you know, maybe 50 cents below that tail right there, I'd say, okay, all right, if the price gets 50 cents below that tail, then it's kind of obvious, or $1, because only because it's a $189 stock, I'm going to say $1. So if they get $1 below that tail, you know, I don't think I want to be in it anymore. You know what I'm saying? Because the buyers aren't doing their job, or they're not doing it consistently enough, right? So that's how I pick where I want my stops, is right underneath wherever I see tails. Now, if you don't see a tail, let's say you see like here's a red candle, then a green candle. Well, if you push those two together, all it is, you would have a tail. So at the bottom of that, where you've got a red candle and then a green engulfing, that's the same thing as a tail, because price moved up over it. So right underneath that is where I would put my stop. So if you see a tail, there's one place. If you see the bullish engulfing, assuming you're long, all right, it would be like underneath that. Now, if it's a $200 stock, you're going to want to give it at least $1 more than the tail. Okay, because it just requires that, because it's so it's a bigger number. All right. Now, when you're dealing with a $10 stock, no, you don't want to give it a dollar leeway. You know what I'm saying, right? Okay, if it's a $200 stock, yeah, you want to give it like an extra dollar. All right, maybe even, maybe two sometimes, especially, you got big numbers require bigger flexibility, more rubber in the rubber band. All right, when you get down to $10 stocks and $20 stocks, you don't need to give them $2 below the tail. All right, and that's pretty much how I pick my stops. Is I find the tails where the buyers have shown me to show up, and I want them to do their job. All right, so you go to a 4-hour on your swing trades, and I look for the buyers to do their job. That's it. All right, and I give them room to do their job. If they got to go to the shed, pick up a shovel, whatever they got to do, I want to give them room to get their job done. All right. So, the bigger the stock, you're going to have to give it, a little bit more flexibility below that. All right. Does that help you? Hey, John, you use a 1 to 2 risk reward on intraday? Sometimes, most of the time I do, yes. I do a lot of spreads, Ricky. A lot of 0 DTE spreads that I put on either at the beginning of the day or at the end of the day, or near noon. Like today, I put on a spread because on the SPY, because I saw that we hit a monthly downtrend line. I'll just go to the SPY. I hope it's still up there. And it's around here somewhere, Ricky. There it is, right there. So it's hard to see. I know I got a lot of stuff, but I'm going to back out. I'm going to back out so you can see it. See that line right there? If you back out, you can see we touched here and way back here. Okay? So this was the third touch right there. So you can see price went up there. All right, so I put a bear call credit spread right up there. Now, as price comes down, I rolled it down to make even more money on my bear call credit spread. So after seeing that sellers wouldn't let the price get over, I don't know, what was it, 454, I rolled my strike down to 455. And, it wasn't a 1 to 2 risk reward, but it wound up, capturing a whole lot more profit than I expected because I was able to roll it down and I chased it down. And Joan says, I tend to experience fake outs when I enter and price actions tends to reverse on me. Any suggestions? Yes, Joan. I have a rule. On breakouts, I only do, you might want to write this down, even other people, I don't do a full position. I either do 2/10 or 3/10 of a position on a breakout. On a pullback, I will definitely put on a full load, sometimes a double load. I'll add to it. But on a pullback, I will pretty much always do a full position, and sometimes I'll look to add another position. But on a breakout, I only do 2/10 of a position or 3/10 of a position. And that way, if I lose, if it goes without me, Joan, I'm happy. If it goes against me, I'm not so sad. You feel what I'm trying to say? Okay, that's what I'm saying. I'm not so sad if it goes against me. Like, oh, you got me. Okay, you used your ace and you took my 2 of hearts. Okay, but you used your ace to do that. Oh, look at you. You know what I'm saying? That's the way I look at it. All right, you used your ace to take my 2 of hearts. Like, whatever. And that's what I do. On a pullback, though, I like to put on a full position. Right? And that's all I say. Oh, you got me. That's it. There's nothing you can do. I can't predict which ones are gonna run and which ones are gonna fail. And I don't think anybody can. So because of that, I give all my breakout positions. The best part is don't buy underneath resistance, okay? That's rule number 1. Don't buy on. Wait for it to get over resistance and prove itself as support. There's the other suggestion. There's the other part of the puzzle. All right? See, here's resistance, and you can see price now finally gets above it. All right? And now it's working as support. Okay, so now I want to see it work as support. So you can wait for the breakout to pull back and test the resistance for support and then buy it. It takes patience. Wait for it to come back, show you the support, and then buy it there. Okay? John, you use EdScan. I use both, Angel. I use them both. Why are you willing to be flexible on your delta? Because open interest to me is important. On Walter, I want to get in and out. That's it. I don't want to be. When you get something with small open interest in it, I find that the market maker exploits the fact that there's very little open interest in it. Okay, so I like to see lots of open interest because they keep the bid and the ask more honest. All right, does that make sense? Have you ever experienced when you got into something that only had 98 open interest? And you see that the market maker is really exploiting the fact that there's nobody else here, and you're now stuck playing cards with him, and he's got an ace up every sleeve. You know what I'm saying, Walter? And you're stuck playing at his table, and he's got an ace up every sleeve. It's no fun playing with him. So that's why I prefer open interest over delta. Hey, Mike. Always a pleasure. Thanks for being here. How many contracts do I sell? I don't know. I've had up to 1,000. I mean, but I'm dealing with a $400,000 account. Oh, you're welcome, Ricky. Thanks, RK. Any formula I can share for TC2000? I've got a scan. I can just share this layout with you. And it hunts for options right here. And then it also hunts for stocks over here. Hey, Mike, you just go to my YouTube. Yeah, it's got it in there. I don't have any. Angel, I don't have any formulas. Yeah, Jonah. I will. I'm gonna have I'm going to have an open house after Christmas. All right? And you can hit me up and ask me all kinds of questions. Yeah, Don and Mike, yes. I have it here. Let me just get it for you real quick. See if I can do this without shutting off the recorder. Right there. All right. I've had all of it. I've had all of it in the market 3 days ago. I had all of it in the market on this day right here. And there was a reason for that. I had already known that I saw the double failure, the lower high, and I told everybody I would go all in on puts that day. Yeah, I had on that day right there, I was all in on one trade. I said once the market does the second cross underneath underneath VWAP, you know, the second bearish cross, I told everyone I'm going all in. And I said it at 7:30 in the morning that, you know, on the second cross. So it's kind of cool because I knew it was going to cross twice that day. Not many people can do that. Tell you that, you know, that price is going to cross underneath the 8 on the 10 twice that day. And I said to everybody, on the second cross, I'm going all in. And that was it. And after that, I didn't have all in again. I got out. It was right here. See the one cross? And then I told them it's going to go again. And this is the cross right there. And I told everyone I'm going all in right here on puts. See how it went up? And then it came back down, and that was it. I trade the SPY mostly all day. I love trading the SPY. What I see in the SPY right now, if you want to know, this is what I see. I don't know how it's going to play out tomorrow, but this is what I see. I see a bearish move down, and this right here is a bearish flag. All right, right here. So if you look at any bear flag, this is what it looks like. All right, so a move down, a pullback, bear flag like that, and then the next move typically goes like that. Okay, that's what I see for tomorrow. We'll see. I could be wrong. You know, that is a higher low right there. But that's also a lower high. Notice this was the last high. That's a lower high. I mean, that's a higher low than right here. But that's also a lower high. So we'll see what happens. They may just waffle back and forth and then drop. Hey, Joe. Thanks. All right. If you guys like to come to my room, you know, $24.50. I find it hard to believe if you don't make $24.50 in my room. If you don't, talk to me. For $24.50, you can hang out with me for, well, roughly 25 to 30 days. It's a deal. You got traders in there making $2,000, $3,000 a day. And Jones says price action is a major confluence on the weekly and monthly on the SPY, so I'm expecting a pullback also. Yeah. One thing about day trading, okay? There is a downfall to day trading, all right? Let me just say, those guys that do the swing trading, they have it a little bit easier than me. And it's my choice to day trade, okay? It's my choice. I pick my own demons, all right? But let me just say, the larger time frames are more reliable. When you deal with a small time frame, the trend could last for anywhere from 30 seconds to 2 hours or 4 hours or all day. Okay? The trend could, I mean, that's the deal. All right? It's less reliable than a daily, working with daily and weekly and monthly charts. Those charts are more reliable. That's the pitfalls of being a day trader, is the charts are less reliable. But let me say, okay, the rules of trading transcend to all time frames. Okay, so you can use these rules, whether you swing trade, day trade, futures trade, forex trade, whatever you want to trade. All right, the rules of trading transcend to all markets, all time frames. All right, I'm just saying, as a day trader, the charts are less reliable than the monthly, the weekly. The bigger time frames are more reliable. Like, you take a look at this downtrend line, that's a monthly downtrend line. All right, on the monthly chart. So, you know, that's going to carry some weight. And Mel says, hey, John, if SPY takes out 454.25 on the upside, would that invalidate the bear flag? Yes, it would. Yes, it would. There is an open gap up there, Mel, that was not filled. And it's right up here. It goes up to 456.50. Actually comes up here. Let me just trash that. Start another one. Right there. About 456.50. This is an open gap right here. So they get up over 454.50. Chances are they're going to go do the gap fill thing. Yeah, if they get up over 50% too, Mel, if they take it up over this. There's the move. You can see here's the move, and the bears kept it in the lower half. All right. So if the bears let this drift up here, you know, I would say that the bears have lost the ball, and the bulls are going to go score a first down. Okay, see the midpoint. Notice the pullback stuck at the midpoint right there on the bearish side. Yeah, so if they lose this midpoint, you know, the bulls could run off and score a new first down. Have I considered trading SPX? Yes, I have. I just like the SPY calls a whole lot more, Carol. I have considered it. I did have SPX all mapped out one time recently. And there it is right there. I set up all my pivots that I wanted and targets. You can see I just got to do this day right here. Yep, I was all ready to trade SPX. I'm looking to start a futures account. All right, if that's it, traders, I want to wish you all a happy Thanksgiving. I'm going to have an open house. All right, probably 2 days. Probably Thursday, Wednesday, and Thursday after Christmas. Please register and attend. If you'd like to pick up a trial, if you think I could help you out with your trading, please take a trial. It's only $24.50. Oh, thanks. I like it when somebody gets something. Again, I'm going to have this recorded so everybody can learn from it endlessly. Thanks, Bill. Thank you, everyone, for being here tonight. Have a beautiful evening. Thank you. Probably, yes, Nate. I will. Yeah, when I start. Thank you, everyone. Thanks for the kindness and the kind words. Y'all have a beautiful weekend. Have a lot of fun with your family. Take pictures. Take lots of pictures. Make really nice memories. Thank you. All right. Have a good evening.